Welcome to Share Talk, the only podcast where investors come first.
Hello and welcome to Share Talk. Today I'm joined by Andrew Bell, who's chairman at Rock Resources. How are you today, Andrew?
I'm extremely well.
Right, we haven't spoken for a long time. Mining sector booming. I presume that's helping you just a little at the moment.
Yeah, the boom is helping, but also the things we've been doing have come to fruition.
And clearly, let's say, in terms of my experience with interviewing CEOs and other people like you, I think 8 out of 10 are currently Australian or Australia-based, maybe more even, and you're in the same boat as well.
Well, I'm not Australian. I'm not Australian-based, but we do have activities in Australia, which we were able to advance during lockdown. Because during lockdown, we were working somewhat flexi-time, and we were able to create a whole new business out of Australian gold assets in the state of Victoria, which is hot at the moment.
Right.
In fact, it's very hot.
And you've valued your stake in Jupiter at 2 million versus your overall £6 million market cap. What are the prospects there?
The prospects, for Jupiter?
Yep.
Prospects for Jupiter are extremely good because Jupiter is producing manganese. As you may have seen, the manganese, well, you probably haven't seen, the manganese price has been quite strong. Chinese steel and iron ore demand are actually running at above the levels of 2 years ago, which means record levels. But additionally, Tesla has just announced that it's going to make its electric car batteries not using cobalt, but using more manganese. And, of course, the increasing use of, where Tesla goes, others follow, and the increasing use of manganese in electric car batteries is potentially very interesting for Jupiter.
And is Jupiter, I understand, is in the run-up to an IPO, is that correct?
No, that Jupiter's already listed on the ASX. What we have is Red Rock Australasia Limited, which is a joint venture with Power Metal Resources. And Red Rock Australasia has got these licenses in Victoria. And in fact, we've got, I think, just over 2,000 square kilometres. We've had a 43-101 done, and now in the run-up to a listing, and we compare pretty well with Fosterville South, which listed in April at the time of their listing, and they were $50 million on the first day. Gold price is higher today. Goodness knows what value would be put on us. It partly depends, of course, on management, partly depends on marketing, but we have a really good start, and if we play our cards right, that's going to be an extremely valuable asset for both parties.
So Power Metal Resources, which is something of a stock market darling at the moment as well, that would also get the uplift that you're looking for by definition. You're not just a one-trick pony, though. You have other assets in Africa as well.
Yes, we have, of course, apart from the manganese is in Africa, the Jupiter in South Africa, but we also have our own gold asset in Kenya. In fact, a very good gold asset. 1.2 million ounces resource that we got defined there in, I think, 2012, 2013. We were interrupted for about 5 years by litigation, which we've now solved. So we got that asset back with immaculate timing, just as the gold price starts to go up and in the middle of lockdown. To the north, we have Shanta now really making progress with the northernmost greenstone in the Tanzanian crater, which comes into Kenya, and they're claiming they've got over 1 million ounces at, I think, 12 grams a ton. To our south, North Mara, which was the baric acid, has been in production for a number of years. They've actually been increasing their grade underground. In the middle, there we are, we're just at the starting point. So there's a lot of upside in that. Apart from that gold asset, we also have the copper cobalt exploration assets and development assets in Congo in joint venture. That needs a little bit of work on it, but it's we've got to a stage where we can now start doing some more exploration there. We're about to do some geophysics, and so that's exciting too.
Right, and so what can we expect from Red Rock over the near term?
Intense activity, I think, is the answer.
And in terms of funding, how is that going to pan out?
Well, that's why we've done the funding, is because of the intense activity. We have really to start firing on all cylinders in Kenya now doing exploration. We may have to spend some money on the listing. although it's possible we'll do a pre-IPO funding or sell off one or two marginal assets, so that may end up not costing us anything to pursue that. But we have a little bit of costs in the interim. And then in Congo, we'll be spending some money. So from a time when we really tried to bring the company back to just one or two people running the basic functions to keep everything alive, now that the market has picked up and now that we've got Kenya back, and we've been coming out of lockdown, we've been able to start sorting out Congo properly. We are in a fantastic position, but one which, in order to exploit, we need to spend a bit more money. We need to have one or two more staff, and we need to do some more exploration. So we've raised money to do that, and we've raised money. Our basic admin costs are still covered by internal sources, but we can't expand operations without external finance. So we did that. And I think the prospects for the next few months are going to be extremely interesting.
Andrew Bell, Chairman at Red Rock Resources, thank you very much indeed.
Thank you.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.